I'm Matt Bishar with NAREIT's REIT.com here in Phoenix, Arizona for REITwise 2015, NAREIT's Law, Accounting, and Finance Conference. Joining me is Lukas Hartwich, analyst with Green Street Advisors. Lukas, thanks so much for joining us.
Thanks for having me.
Now here at REITwise, you participated on a panel that was looking at key drivers impacting REIT stock price. How important are FFO and AFFO growth forecasts in those projections?
Yeah, so growth is definitely a consideration that we take in mind when we look at the valuation of a company. But first and foremost, what we look at is just the value of the underlying real estate. And I would say that's the starting point. And then on top of that, how capable is the management team? Do they understand the dual importance of capital allocation and balance sheet management? And what I mean by that, in terms of capital allocation, do they understand their weighted average cost of capital? And are they taking the cues from the public markets in terms of where their stock is trading and using those signals to know when to grow and shrink the company? And then on the balance sheet side, do they understand the optimal leverage level for the company so that not only do they eliminate the risk of financial distress in a downturn, but they also are able to take advantage of opportunities when they do arise, which tends to happen in poor economic times.
And picking up on something you just said, what impact does leverage have on share price?
It's a great question. So leverage is something that's very near and dear to Green Street's heart. We kind of pound the table on low leverage, and Mike Kirby, actually our founder and director of research, just put out a really interesting research report on optimal level of leverage, and the conclusion was that 30% or below is where you want to be on a debt to assets basis. And what we found is companies that have operated at that level of leverage have outperformed over the long run. And so lower leverage tends to lead to better performance over time, kind of based on those two principles I mentioned earlier in terms of eliminating the risk of financial distress and as well as being able to take advantage of opportunities.
Great. And lastly, when looking at share price, how do you factor in intangibles like the management team's value?
Great. It's a great question. So at Green Street, we start with our NAV, a very accurate estimate of the market value of the assets. So we subtract off the market value of the liabilities to get to a market value of the equity, but then that's just a starting point. So we layer on top of that the management team, the track record, how have they performed, and what are our thoughts on how they're going to perform going forward. And then other things, leverage is important. Overhead, so G&A overhead. Some companies have more G&A relative to some of their peers that are similar size. And then also corporate governance, which is kind of a hot button issue today. Is the management team going to do the right thing at certain points in the company's life cycle? So you want them to be on your side, and we try to give credit for all these different metrics when we look at a company and where it should be valued.
Great. Lukas, thank you so much for joining us today.
Yeah, thank you.
Great. For more on this and other REIT news and analysis, be sure to visit REIT.com.